It seems completely contradictory that you buy companies that nobody else wants, and then given it a bit of time, that as a group they tend to outperform over a 3 or 5 year time period. That tends to be the case, and it tends to be the case for lots of stocks. You can apply this value investing in many different ways. We just discussed briefly just a discount to NAV, or what I do, a discount to working capital, which is the most extreme. But I specifically choose this group of companies because they tend to have the strongest performance of any of the value stocks and against the indices. It tends to be that this group always gives the best performance over the years. Why is it that these companies tend to be so good in delivering results when the outset looks so very unattractive? I think it is really from looking at it from the other way, is that people start off with too much optimistic expectations on the companies that are performing currently quite well. They are happy to pay up for that, and they then envisage that this trend that this stock has shown will continue into the future for I don't know how long, but for the next 5 or 10 years. And that is unfortunately, that is not reality. I think it is very much from that angle. It is that the other ones disappoint where the expectations are highest. And where I look at the companies that I invest in, they have disappointed and really have nothing further to lose. They're just languishing in the market, but they still obviously have assets and there is value there. They still have turnover. And coming from that very weak position where they are in share price terms, it doesn't really take that much for these stocks then all of a sudden to double. That wouldn't be that difficult. While it is much more difficult for big established companies to have the same kind of price performance. And I think that is the difference.